What's going on, guys? Today's Friday the 17th. Today was another very profitable day for me. I took two trades, one in the morning and I think two in the morning and one in the PM session. And I just wanted to go over the breakdown with you guys. Hopefully, I can give you guys a little bit of insight and help someone out there who's just starting. So let's get straight to it. These videos are meant for educational purposes only. Any trades taken in the financial markets are under your own discretion. The information taught should be demoed and only taken to live accounts under your own responsibility. E is Profitable will not be held liable for anything you do with the information presented. All right, guys, so we're looking at the chart from the daily time frame. For the most part, the first thing you want to do is you want to go to the economic calendar. You can use forestfactory.com and you want to see what news or events are scheduled that week, right? You want to already know what's coming so you can kind of match that with what's happening in the charts and make better decisions. So this week was CPI week. There was a lot of high impact news. We saw that Thursday had a big expansion up. We're not surprised by that expansion because we knew that the market would most likely reach up to this daily imbalance or sell side imbalance, buy side inefficiency, or fair value gap, however you want to call it. So we saw that Thursday we had that huge expansion, and then if we go down to, let's say, the 1 hour time frame, we can see that overnight during Asia and overnight the market literally stopped right at the top of that imbalance. And this is why nobody can tell me that the market is not controlled by an algorithm. There is no way that you can tell me that buyers were buying this, and as soon as they got to that little price area, 4009.25, right, as soon as they got there, that the sellers got in and took over. You know, that is the only way you can explain moves like these, is that the market is controlled by an algorithm, guys. So as you can see, during Asia, the market created some relative equal lows. I did not participate in that, but that right there alone could have been a play for you guys. If you go down to the 5 minute, you see how the market created those relative equal lows. That could have been a target. You could have got in when the market started to break down to target those relative equal lows. Anyways, I normally trade during the New York session, so that's exactly what I did and how I took these trades. So let's take a look at this. So first thing I like to do is I like to find inefficiencies in price. There was a 1 hour imbalance right there when I woke up that I had marked. I went down to the 5 minute and I saw that price had reached down here, took out some sell side liquidity, and I was waiting for the market to attack buy side next. With that being said, I went on the 1 minute time frame, and I'll show you guys all this. I'll take a screenshot of the profits that I made today. So as market is moving higher and higher, the moment the market does this, you see how it created like a relative equal high, right? As soon as you see areas like that, I mean, that is like given to you. When you see the market retrace after it creates relative equal highs, you need to look to get in the market, right? So that could have happened right here. Once the market stops there and it retraces in this little area, you start looking at the different PD arrays in this area. It could be an order block. The way I got in right here is I think I got in through here, this balanced price range. As soon as the market tapped into that balanced price range, I got in on some buys. I put my stop loss a little bit further down and I targeted those highs, right? Because I knew that this right here, this area here, and I'll go ahead and mark that for you, created relative equal highs, right? Boom. You see that? You see this area? Retail are looking at as resistance. So what did the market do? It retraced, and then what did it do? It came back up one more time, Still gave the impression that there was strength. It came back, took out sell side liquidity, and then what did it do? It ran up one more time, right? So these moves are happening every single day, guys. And the more you practice, the more you look at this, the more chart work and screen time you have, the easier it's going to be for you guys to find this, right? So once the market comes up there, I already had this 1 hour imbalance mark. So that was my sign that it was time for the market to do what? To attack sell side liquidity. So at that point, I went to the 3 minute. Mind you, I'm going between 5 minute, 15 minute, 1 minute, 30 seconds. Like I'm changing the different time frames to see what I see, right? The 5 minute, once price tapped into this 1 hour, you don't see a breakdown. If you go to the 1 minute, right, and you go to that area, you don't really see an opportunity to get in. There's no fair value gaps here. There are other ways that you could get in, but what I was looking for is something clear. So I found that on the 3 minute time frame. What do you see on the 3 minute time frame? Price created a fair value gap here and another one here. So what did I do? I got in. Why did I get in on some sales? Because if you notice, look at what price did down here. Let's go down to the 1 minute, right? Price is doing the same shit it did up here, how it created relative equal highs. Down here, it created relative equal lows, right? The market came down and expanded up, took out buy side, and now you know that it's going to target the relative equal lows. So as soon as it retraces right here, I'm going in on some sales, and that's what I did to target sell side, right? And what did the market do? It came all the way down here to what? To a 1 hour imbalance that I also had marked, and that I'm also sharing with my Discord group ahead of time. So they're seeing this before it even happens, and I'm just marking up the charts. So what you guys have to understand that a lot of people can mark up charts all day, but they don't know how to execute. I'm actually showing you that I can do both. I can mark the charts, make them look pretty, but I can also execute and make money. So if you guys want to get to that level and get better, even better than me, I mean, you have to put in the work. You're not going to find a simple strategy, cookie cutter, that's going to get you rich and make you profitable. That does not exist. It takes time. It takes experience. It takes psychology. It takes discipline. I mean, this is something that'll require, I would say, at least a year of hard work before you start to see progress in your trading. Anyways, so that's exactly what the market did. It came down, attacked sell side. So at this point, I saw that the market took out sell side a few times. So what did I do? I was prepared for the market to do what? To retrace. What you'll find is that a lot of times when the market is bearish or bullish, right? Let's say the market is bearish for the day, it'll retrace during lunch, and then it'll attack the sell side again. Vice versa, when the market is bullish, it'll retrace during lunch, and then it'll attack buy side again. Why does it do that? It does that because when the market is bearish, guess what? You got people down here buying the bottom, right? When the market is bullish, people are selling the top, right? That's retail mentality. They're trying to get the lowest price possible. And what does the market do? It induces buyers, and then it takes them out. So you can play both sides of the fence if you're playing it smart, right? So once the market took out sell side, and you know it's time to retrace, I got into some buys. Where did I get into some buys? I got into some buys right here, and I'll show a screenshot of that right now. You can see, boom. All right, so I got into this right here, and I closed my position when price tapped into this 5 minute fair value gap that I had marked, right? So all this price action here during lunch is just crap. All it's doing is taking people out from short sell side, buy side. But at the end of the day, what is the market going to do? It's going to come back to take out sell side liquidity because the market was bearish for the day, right? And if you go to previous days and you do your homework, you will see that this phenomenon, if that's what you want to call it, happens over and over, guys. So just wanted to show you guys briefly what my thought process was on how I got into these trades and how I was able to make today. I think it was like $1,400. So I say that to say this, guys. It does not take a lot for you to make money once you understand the concepts and once you have that screen time, guys. And what I would recommend you guys to do is to stick to one, no more than two instruments. Every instrument has its own intricacies, its own personality, the way it moves, and so forth. And you need to spend enough screen time on one instrument to fully understand it and know, with experience, where and what time of days are the high probability moves that take place. All right, guys, so thank you for joining. I hope this video was insightful. Don't forget to subscribe to the channel. I am dropping a ton of solid content this year. And for those that want mentorship, you have the Discord link in the bio or in the comments. All right, guys, you guys have a good weekend.